Theresa May really going from the frying pan and into the fire. How do you invest around this now with UK assets?
With considerable difficulty. I'd rather have a short bias on sterling assets, and we have that in some of our strategies. I've been surprised how low implied volatility is for sterling, given that we really are approaching a crunch point for the UK in terms of whether it is able to secure a withdrawal agreement, avoid a hard Brexit. So either way, I think sterling could be pretty volatile. I do actually think as well have a bias towards being short gilts, because I do think that if we get a so-called soft Brexit, then I think the banks will then push ahead with some of the rate hikes. If we don't, then I think we're probably looking at a general election, and I think there'll be a kind of risk premium being priced into sterling assets.
Tom, you're going to love this. So you know how Mark Carney comes under fire for his communications? During the audio feed at Farnborough today, it was so bad that eventually it just shut down completely. Just a little bit of colour that I want to bring to what we had from Mark Carney. But in terms of looking ahead to the August BOE meeting, I mean, the market pretty much pricing in that rate hike. Is there anything that could happen between now and then that might change that picture the way it did in May?
I don't think so, because we've had UK data, including most recently in terms of employment, and I think that's been consistent enough with the Bank of England doing a hike in August. I've been sceptical, as you know, that actually these rate hikes are actually warranted. I don't see a wage price spiral developing in the United Kingdom. Unlike in the US, the UK household sector hasn't delivered anywhere as much. And I think it's pretty much maxed out on its credit card. So I think it'll be a kind of one and done, to be honest.